Let's talk redeemable tax deeds. So, you know what a tax deed is and you know what a tax lien is, but what the heck is a redeemable tax deed? So, redeemable deeds are only sold in a few states, but they can be incredible investment vehicles in those states, so it's very important that you understand them fully. A redeemable deed is more or less a mix between a tax deed and a tax lien. In a redeemable deed state, they do sell the property to you, and your name is recorded on the deed. However, the delinquent taxpayer or any interested party, like a lien holder, like a mortgage holder, does have the ability to come in after you purchase the property and cancel your deed. In other words, you would lose ownership at that point. However, it's not all bad. In a state like Texas, for example, some properties can be redeemed for up to 6 months or even longer depending on the type of property after the date the deed has been filed. But it's not always the easiest thing to do financially for the delinquent taxpayer because the returns to you, the investor, are so good. In that example in Texas, where they redeem it in, say, 6 months, when that property is redeemed, you get your money back plus 25%. That's a 50% annualized return. In other words, that's really, really good when you're talking about ROI when it comes to investing in an asset such as real estate. Now, in that situation, you would get your money back plus your 25%, and they would get the property back. The deed would be canceled. So as you can see, the penalties are very steep. And because they are so steep, the redemption rate in redeemable deed states is going to be much lower than what you'd find in a tax lien state. And this means, of course, that if they do not end up paying you back in the allowable time period inside that redemption window, they will lose their right to redemption, and you'll simply keep the property as if you purchased it at a tax deed. So at that point, they can no longer come in and pay off those taxes. Obviously, with everything tax law related, these specifics do vary from one state to the next. So make sure you check out the area that you are investing in for the length of that redemption period, the rate of return, and other specifics in your situation. But as you're going to see, redeemable tax deed states are incredibly lucrative regardless of whether the property is redeemed or if you end up keeping it. Hope this helps. For more information on the incredible and extremely profitable tax sale business, make sure you check out all the links in today's video description, including the one to our primary tax sale training at taxsaleacademy.com. Take care, folks. Bye-bye.